Hey everybody, it's Patrick here, and I wanted to chat real quick about the big news that's going on. If you haven't heard, it's the Federal Reserve's meeting and their optimism for the economy and how this is going to affect interest rates, the real estate market, credit cards, car loans, and just about anything else because everything seems to be tied to interest rates in the housing market nowadays. Stay tuned and we'll chat real quickly about what's going on and what you can do to be prepared for the next 12 to 24 months as we go through what may be a significant shift in the real estate market. Hey everybody, this is Patrick Culleton here with Your Home Sold Guaranteed Realty and powered by Nexa Mortgage, and I appreciate you for logging in today to watch this video. I want to get right into it. So what's going on right now? Well, the Federal Reserve had another meeting yesterday, and this one was significant in the sense that not only did they continue not to raise interest rates, but on the post-meeting conference, Federal Reserve Chairman Jerome Powell expressed a new level of optimism that we haven't quite heard from the Federal Reserve in meetings past. So a lot of you may know, for those of you that do not, the Federal Reserve does set interest rates through what they control, known as the Fed rate or the key interest rate. Now, although this isn't the same exact thing as a mortgage rate or an automobile rate, it does affect pretty much all other rates through the fact that this effectively controls what it costs for banks to lend to each other and has a big trickle-down effect on the rest of the economy. So when the Fed rate goes up, most other rates go up. When the Fed rate comes down, most other interest rates come down, including mortgages, car loans, and credit card loans. So it's very important to pay attention to what's going on because at this point, you just can't really live in America without being affected by the Federal Reserve. I'm not going to say that's a good thing, but it is the system that we live in today. So what happened exactly that's causing all this uproar and all this news? I'll tell you what. Not only, again, did they not raise interest rates for the third meeting in a row, but they indicated that there may not be the need for future rate increases. Now, this is very different because previously, although they did not raise rates the last 2 or 3 meetings, they said things like, we're going to need to keep a close eye on data, and this may just be a temporary pause before we continue raising rates again. Now, this language that we heard yesterday was totally different, and it was much more optimistic. Based on comments from Jerome Powell, he indicated that they really like what they're seeing from the core data that they look at, which includes the consumer price index, the core inflation data, unemployment numbers, and things like that. Based on these numbers, they feel as though the effects of interest rate increases have had the positive impact that they wanted them to have, thus slowing down inflation. Based on this language, it sounds like they may not intend to raise interest rates for the foreseeable future. Now, the market responded very favorably to this, with interest rates for mortgages coming down almost instantly. Right now, we're sitting at the lowest point that we've seen over the last few months, with rates finally starting to get down in the low 6s and even the 5% range. Now, if you think about the effect of this is going to have a number of implications. Number one, and most obviously, yes, when interest rates come down, more buyers can afford to purchase homes. This is because most buyers aren't looking at the overall price of the home, but they're actually limited by what their monthly payment can be. So when interest rates go up, it costs them more money to borrow the same amount of money, aka a $250,000 home will cost more when interest rates go up because the cost of borrowing money goes up. Conversely, when interest rates come down, they can afford more home because they will pay the same payment but be able to borrow more against it. I hope that makes sense. So when interest rates come down, buyers will tend to start flooding the market and putting more offers on more properties, which can push prices upwards. However, a lot of homes are still locked up right now by homeowners who have a 3-4% or lower interest rate and aren't that pushed to sell if they're going to be upgrading to a 7 or 8% rate. However, with rates starting to come down, if someone's jumping from a 3% rate to a 5% rate, that's not nearly as significant as going from a 3% rate to a 7 or an 8% rate. So hopefully this increases the amount of inventory that we have available on the market as some of these homeowners decide to finally get out of their homes and moves. We've had a lot of homes locked up for the last 2 to 3 years that have appreciated quite a bit. The homeowners are sitting on plenty of equity, but they just don't want to move and lose that low interest rate. So this is hopefully going to be good for everybody. It's going to be good for the market because more buyers will be able to afford a home. It'll hopefully be good for those buyers even further because more homes should become available. And then home sellers who are ready to finally do this and don't have to sit around and wait anymore can get out and start shopping for themselves. not just helping themselves buy a home, but of course allowing their current home to become available inventory for first-time home buyers or whoever is looking to move up into that kind of property. So in addition to the real estate market, we know that this is probably also going to have a positive impact on automobile rates, credit card rates, personal loans, and things of that nature. So this may be good news for the economy, but it might also be a little too soon to tell. This is just one word of optimism from the Federal Reserve, and we have to keep in mind that they are going to continue meeting, and we may see rates continue to go up if they decide that they don't like what they've done with pausing rates. However, I'm going to remain cautiously optimistic, and my personal prediction is that rates will remain relatively flat and hopefully trickle down further over the next few months, hopefully getting us through the spring selling season where we can see more homes come available on the market. Now here in Metro Atlanta, the spring selling season really starts around February or March, so if you're thinking about buying a home this year, I would encourage you to start chatting with your local professional by the beginning of January, February, so you can start to put a game plan in place. Besides, things can change between now and then. Rates can go up, rates can continue going down, or a whole lot of other things can happen. It's also important to remember that we're coming up on an election year, which usually has a significant impact in the real estate market because the incumbents typically like to grease the wheels of the economy so they can earn some more votes, and whoever's coming into office is possible to make some radical changes that could hurt or help the economy. So there's still a lot up in the air. However, if you have been waiting on the sidelines, waiting for the right moment for rates to come down, this is a good time to start the process. It might not be the right time for you to go ahead and pull the trigger, but I would definitely encourage you to start getting your ducks in a row and start doing your research in the event that rates do continue to come down, so this way you can be poised and ready to make the decision that you want to make. If you have any questions about the market, interest rates, what your rate might be, or any of our new first-time homebuyer programs, don't hesitate to give me a call. 404-974-6722. You can reach me 7 days a week, and thank you so much for watching this video. If you found it helpful, I would personally appreciate it if you wouldn't mind liking or subscribing, because that really helps me out a lot, especially because I'm growing a new channel here. But either way, I do appreciate you for tuning in. Stay tuned for next week's update and go out and make it $1 million day. Bye now.